Well, it wasn't long ago during the depths of the housing crisis that Uncle Sam had to bail out the mortgage giants Fannie Mae and Freddie Mac for a combined $187 billion. But that was then. Now, after the housing market recovery and 8 straight quarters of profits, and big ones, Fannie Mae is ready to repay its bailout loan in full. With Fannie's March payment, the two companies will have sent more than $192 billion back to the Treasury. John Harwood joins me now from Washington with more on the good news from Fannie, what it means for the Treasury's coffers, and what is next for Fannie and Freddie. John, this was not a surprise, I suppose, but I guess a welcome signpost.
You know, Uncle Sam's loving it right now. They're getting big fat checks from these entities that they took over a few years ago that sucked a whole lot of money out of the Treasury. And now, as some one-time events are materializing, especially the return to profitability has caused the Fannie and Freddie to write up the value of some tax benefits that they had before that they had not counted on repaying. They've also gotten some settlements with other counterparties in the financial system. The bottom line is that this is beneficial to the Treasury right now, but we've still got a big debate in front of us, Tyler, on what to do with these agencies long term. The administration says just because times are good doesn't mean we shouldn't figure out a different and restructured role for the government in the housing market.
So what is likely to happen, John, to these two companies? Is the taxpayers' stake likely to, in one way or another, be eliminated at some point? What's going to happen?
Not entirely, but it's going to be changed. The question is, when can we overcome the very large philosophic divide we've got between Republicans and Democrats, liberals and conservatives? It's playing out here as it does on the budget and other issues. The House has got a bill which would very strongly take the government out of this market and basically turn most functions almost entirely over to the private market. The administration, bipartisan groups in the Senate say, no, we should have a more modular system. You have one part that preserves some of the government functions that try to advance the societal goals we have for people to own homes, first-time home buyers, that sort of thing, but also still put in private market hands the liquidity functions, the securitization functions. That is a divide that is probably too great to be bridged in this Congress, but the conversation is going to continue over the next several years, and I think Washington will come to consensus. The question is it in Obama's presidency or afterwards?
And it's been a debate that's been going on for years and years, as you point out, John. Very quickly, is there an argument, given the fact that these are profit-making enterprises, for the federal government to hold on to them and bring in those profits?
There is an argument for that, and it's not so much stated out loud. It's more by inertia. As long as they're writing checks, why do anything? But I think that both parties, neither one is going to be comfortable long-term with holding on to these things. They want to get it back to the private market. The only question is on what terms.
All right, John Harwood, thanks very much. Have a great weekend.